Well, home sales in the GTA have certainly dropped in the last 4 months, and signs suggest the market could remain a little choppy until halfway through next year. Jason Mercer, the Chief Market Analyst at Toronto Regional Real Estate Board, joins us now live to talk more about the GTA housing market. And Jason, good to talk to you this morning. I was taking a look at your report here. Interesting that there's better supply, which generally would mean more supply, maybe prices go down, but prices are up a little bit.
Yeah, if you look at the average home price this September past compared to September 2022, the average home prices are up in comparison to last year over the last 12 months. But interestingly, on a month-over-month basis, we have seen things trickle lower a little bit. And the point we made in the release is that may provide a little bit of relief for people who are out there searching for a home right now and help mitigate some of the impact of higher borrowing costs, because it really is sort of a short-term versus more medium-term outlook. I mean, right now we're still certainly feeling the impact of higher borrowing costs, but as we look forward, we're still seeing record population growth, and a lot of these newcomers who will be searching for a home, say in 2024 and beyond, should start to benefit from lower borrowing costs, say second half of next year onward.
Right, and that's the thing. But we just talked with Paul Bagnall about the bond markets, signaling kind of potentially another interest rate hike coming down the road. What does your analysis suggest about the potential? We thought we were hitting pause, but it's pretty clear that that pause isn't a very firm pause.
Well, again, I think it gets back to the sort of the short-term side of the outlook and the uncertainty that's there right now. I mean, if you think back to the first quarter and moving into the early spring, back then we were talking about the prospect of maybe even seeing interest rate cuts this year.
Yes.
And so people were buying into that, and we saw a brief uptick in the market as people were anticipating lower borrowing costs and what have you. But I think over the last, say, 3 to 4 months, people have really taken a step back because A, we're not sure where the Bank of Canada is heading in terms of its monetary policy, and B, we're starting to see more cracks in the economy, both in terms of economic growth and the labor market. So I think there's a lot of people out there that have every intention of purchasing a home at some point in the future, but right now they're taking a bit of a wait-and-see attitude.
And that's interesting because the wait-and-see attitude seemed to have been from the seller side for a while. We've had a lot of conversations about sort of the limited supply on the market, people who were thinking about maybe moving or moving up, kind of taking a pause. But I think that said new listings were up in your latest report.
That's right. New listings are up on a year-over-year basis as well as month-over-month. And you do see some of that as you move into the fall. There is a bit of seasonality to those numbers because the expectation is you will see more market activity, say, in September and October. But nonetheless, it's a better supplied market now, and I think that'll see some buyers who are active in the marketplace benefit from a little bit more negotiating power.
Okay, we'll be watching the markets very closely, but we always appreciate the analysis. Jason Mercer from Chubb, thanks for being here again.
Thank you.